Anticipated 50% surge in investment across real estate, retail, cybersecurity, and education by Q1 2027. Overview. As of January 27, 2025, a significant forecast has emerged indicating a 50% increase in investment across four key sectors: real estate, retail, cybersecurity, and education by the first quarter of 2027. This anticipated surge is largely attributed to a combination of economic recovery, technological advancement, and the evolving demands of consumers and businesses alike. 1. Real estate sector outlook. The commercial real estate (CRE) industry, having navigated a challenging landscape characterized by high inflation and interest rates, is now positioned for a strong rebound. According to a Deloitte report, 88% of global real estate executives predict revenue growth in 2025, a notable shift from the previous 2 years of declines. Key factors driving growth: easing borrowing costs, improved access to capital is expected as interest rates begin to stabilize, allowing more investments. Tenant demand evolution: a shift towards hybrid work models has increased demand for flexible and tech-integrated spaces, particularly in industrial and multifamily sectors. Digital economy properties: investments are expected to favor logistics and data centers, fueled by the rising demand for technology infrastructure and AI capabilities. 2. Retail sector rebound. The retail industry is also set to undergo a transformation primarily driven by a resurgence in consumer spending and the integration of digital technologies. Growth drivers: omnichannel strategies: retailers are now focusing on blending online and offline experiences, enhancing customer engagement and satisfaction. Consumer behavior: as consumers regain confidence in the economy, discretionary spending is expected to rise, leading to increased investments in both physical and digital retail spaces. 3. Cybersecurity investments. With cyber threats growing in sophistication and frequency, organizations recognize the urgent need to bolster their cybersecurity frameworks. Investment trends: increased budget allocations. Many companies are planning to allocate larger portions of their budgets to cybersecurity measures, reflecting the critical nature of protecting digital infrastructures. Technology integration: as industries undergo digital transformations, the demand for advanced cybersecurity solutions is expected to escalate, with growth primarily concentrated in sectors heavily reliant on technology. 4. Education sector transformation. The education landscape is witnessing a significant shift towards technology-driven learning environments, accelerating investments in digital tools and platforms. Key developments: remote and hybrid learning. Post-pandemic, there is a growing demand for flexible education solutions, prompting educational institutions to invest in technology that supports diverse learning modalities. Accessibility and flexibility: innovations aimed at improving access to education for a broader audience are driving investment in this sector. Aligning with the needs of modern learners. Common trends across sectors. Across all four sectors, there is a pronounced trend towards digital transformation and sustainability. Organizations are increasingly prioritizing investments in technology to enhance operational efficiency, improve customer experiences, and address environmental concerns. Comparative insights from different sources. While Deloitte emphasizes the recovery and optimism within the commercial real estate sector, the World Economic Forum highlights the immediate need for investments in cybersecurity. The retail sector's growth narrative focuses on evolving consumer behaviors, whereas the educational investments are framed within the context of technological integration and accessibility. Timeline for anticipated changes. The timeline suggests that as we approach 2025, the real estate sector will begin to recover from a period of muted revenue growth. Concurrently, the retail sector will benefit from increased consumer spending and technological innovations, while cybersecurity investments are expected to peak by 2026. The education sector will continue its transformation, driven by advancements in technology and shifting learner expectations. Conclusion: The projected 50% surge in investments across the real estate, retail, cybersecurity, and education sectors by Q1 2027 signals a robust recovery and strategic repositioning within these industries. This growth is underpinned by economic recovery, technological advancements, and evolving consumer needs, which are reshaping the landscape of these sectors. Companies that capitalize on these trends, particularly in terms of digital transformation and sustainability, are likely to emerge as leaders in their respective fields. The anticipated 50% surge in investment across the sectors of real estate, retail, cybersecurity, and education by Q1 2027 highlights several counterintuitive insights that challenge conventional expectations about these industries. 1. Real estate recovery amid challenges. While the commercial real estate sector has faced high inflation and elevated interest rates, the expectation of recovery contradicts the prevailing narrative that these factors would lead to prolonged stagnation. The optimism among 88% of real estate executives regarding revenue growth by 2025 stands in stark contrast to the 2 years of revenue declines experienced prior. This reflects a surprising resilience in the sector, suggesting that strategic shifts toward properties that cater to logistics, data centers, and multifamily units may be overshadowing the traditional concerns tied to economic downturns. 2. Retail's digital transformation. The retail sector's anticipated growth due to increased consumer spending and digital integration defies the expectation that brick-and-mortar stores would continue to struggle in the wake of e-commerce. The notion that retailers are investing heavily in omnichannel strategies to enhance customer experiences indicates a significant paradigm shift where digital and physical retail are no longer seen as opposing forces but rather as complementary avenues for growth. 3. Cybersecurity as a growth driver. The urgency around cybersecurity investments driven by increasingly sophisticated threats suggests a counterintuitive realization as businesses undergo digital transformations. The perceived risk associated with these advancements is prompting a proactive approach to investing in security measures. This counters the common belief that companies would prioritize immediate operational efficiencies over long-term cybersecurity strategies. 4. Education sector's technological integration. The education sector's transition towards technology-driven learning solutions post-pandemic contradicts the expectation that traditional educational models would remain unchanged. The rising demand for remote and hybrid learning models indicates that educational institutions are not merely reverting to pre-pandemic norms but are instead embracing a future that integrates technology deeply into the learning experience. 5. Common trends across sectors. The overarching theme of digital transformation across all sectors reveals a counterintuitive insight, rather than seeing technology as a disruptor. Organizations are recognizing it as a vital enabler for growth and sustainability. This shift in perspective indicates a growing awareness that investment in technology and digital solutions is not just a response to current challenges but a proactive strategy to secure future competitiveness. 6. Sustainability as a financial imperative. The emphasis on sustainability in real estate, particularly through deep energy retrofits, challenges the notion that sustainability investments are primarily compliance-driven or reputation-based. Instead, survey responses indicate that a significant number of executives view sustainability as integral to long-term financial viability and competitive advantage, suggesting a strategic alignment of environmental goals with business objectives. 7. Talent attraction amid workforce demographics. The impending retirement of a significant portion of the workforce in commercial real estate could be perceived as a liability. However, it presents an unexpected opportunity for organizations to attract fresh talent by aligning corporate values with those of younger generations, particularly in terms of climate action and work-life balance. This shift in focus from merely filling vacancies to cultivating a values-driven workplace contradicts traditional views on talent management in industries facing demographic challenges. 8. Mergers and acquisitions as a growth strategy. The anticipated increase in M&A activity in the commercial real estate sector, driven by a pursuit of technological capabilities rather than mere portfolio expansion, challenges the conventional wisdom that M&A activity is primarily about scale. This suggests a shift in corporate strategy where organizations are prioritizing innovation and capability enhancement over traditional growth metrics. 9. AI integration in decision-making. The slow but steady adoption of AI in commercial real estate with a focus on enhancing operational efficiency contradicts the expectation that such advanced technologies would be quickly and widely implemented across the industry. Instead, the cautious approach towards AI adoption reflects an understanding of the need for foundational data quality and readiness before fully reaping the potential benefits. 10. Global investment dynamics. The shift in focus from international to domestic investments in real estate, particularly in light of the pandemic, presents a counterintuitive dynamic. While global investment volumes have declined, the concentration of investment in regions like Asia-Pacific indicates a nuanced understanding of local market dynamics that defies a simple broad-brush approach to global real estate investment. In summary, the anticipated surge in investment across real estate, retail, cybersecurity, and education by Q1 2027 is marked by several counterintuitive insights that reflect shifting paradigms in industry thinking, technological integration, and strategic focus. These trends challenge traditional narratives and highlight the adaptive strategies organizations are employing in response to evolving market conditions and consumer expectations. The anticipated 50% surge in investment across real estate, retail, cybersecurity, and education by Q1 2027 signifies a transformative phase that could reshape these sectors significantly. While many observers might focus on the overarching trends of recovery and investment growth, several nuanced aspects within the report warrant deeper attention due to their potential long-term implications. 1. Real estate sector recovery dynamics. The commercial real estate (CRE) sector is projected to rebound after enduring a challenging period marked by high inflation and elevated interest rates. The report highlights that 88% of global real estate executives expect revenue growth in 2025, contrasting sharply with the pessimism of prior years. Key points that may be overlooked include: evolving tenant demands. The shift towards remote work has transformed tenant preferences, driving demand for more flexible spaces. This trend highlights the necessity for real estate investors to adapt their offerings to meet the changing needs of tenants, particularly in sectors like industrial and digital economy properties. Sustainability as a financial imperative. The report emphasizes the increasing importance of sustainable practices such as deep energy retrofits. Investors who overlook these trends may find themselves at a competitive disadvantage as regulatory pressures mount and consumer preferences shift towards greener options. Geographic disparities. The recovery is not uniform globally. While certain regions like North America and Asia Pacific show optimism, Europe remains more cautious. This geographic variance could create differentiated investment opportunities based on regional economic conditions and regulatory environments. 2. Retail sector adaptation. The retail sector is poised for growth driven by a resurgence in consumer spending and the integration of digital technologies. However, critical points to consider include: omnichannel strategies. The shift to omnichannel retail is not just a trend but a necessity for survival. Retailers must invest in both physical and digital infrastructures to provide seamless customer experiences. Overlooking the importance of a cohesive omnichannel approach could result in lost market share to more agile competitors. Consumer behavior insights. The report notes a resurgence in consumer spending, but it also hints at changing consumer behaviors influenced by economic conditions and technological advances. Retailers that fail to adapt to these evolving behaviors may struggle to retain customer loyalty. 3. Cybersecurity investment urgency. With cybersecurity threats becoming more sophisticated, the report highlights a critical area where investment is not just necessary but urgent. Key overlooked insights include: strategic budget allocation. Many organizations plan to allocate significant portions of their budgets to enhance cybersecurity. The urgency is driven not only by risk but by the potential for regulatory repercussions and the necessity for businesses to maintain consumer trust. Organizations dismissing these investments may expose themselves to severe risks. Integration with digital transformation. Cybersecurity must be integrated into broader digital transformation strategies. Companies that view cybersecurity as a standalone initiative risk creating vulnerabilities that could be exploited during digital transitions. 4. Education sector transformation. The education sector is experiencing a significant transformation driven by technological integration. Important points not to be missed include: demand for flexible learning solutions. The shift towards remote and hybrid learning models reflects a long-term change in how education is delivered. Institutions that fail to innovate and adapt to these models may struggle to attract students in a competitive landscape. Investment in digital tools. The anticipated rise in investments in digital learning tools is critical. Institutions that overlook the importance of these tools may find themselves at a disadvantage as students increasingly seek flexible and tech-driven educational experiences. 5. Workforce implications across sectors. A critical but often overlooked theme in the report is the impending demographic shift in the workforce, particularly in the real estate sector. Retirement cliff. With 40% of the workforce expected to retire in the next decade, attracting and retaining the next generation of talent is paramount. Companies that fail to proactively address this talent gap may face significant operational challenges and loss of institutional knowledge. Upskilling and technological adaptation. The report underscores the need for organizations to invest in upskilling initiatives to prepare the workforce for evolving technological landscapes, including AI integration. Failing to prioritize these initiatives could exacerbate the skills gap and hinder overall sector productivity. 6. AI integration in commercial real estate. The report notes that AI adoption in commercial real estate is still in its infancy, with most firms in the early stages of implementation. Key insights include: data quality challenges. The reliance on data for AI applications cannot be overstated. Companies that neglect to address data quality and standardization issues may struggle to realize the benefits of AI, leading to poor decision-making and inefficiencies. Change management. The transition to AI-driven processes requires effective change management strategies. Organizations that overlook this aspect may encounter resistance from employees, hampering the successful implementation of AI technologies. Conclusion: the anticipated surge in investment across these sectors is indicative of broader economic trends and shifts in consumer behavior. However, the nuances within these trends, such as the need for sustainability in real estate, the urgency of cybersecurity, the evolution of retail strategies, the demand for flexible education models, workforce demographic shifts, and the challenges of AI integration, are critical for stakeholders to consider. Failure to recognize and adapt to these subtleties could lead to missed opportunities and significant risks in a rapidly changing landscape. The sectors poised for growth will not only be those that invest in recovery, but those that strategically align with emerging trends and evolving consumer expectations. 1. Real estate sector recovery and strategic shifts. The anticipated recovery in the commercial real estate (CRE) sector is driven by a combination of easing borrowing costs, increased capital availability, and evolving tenant demands due to remote work trends. The optimism among real estate executives about revenue growth in 2025 marks a significant turnaround from previous declines. Key areas for investment include industrial, multifamily, and digital economy properties, reflecting a strategic pivot toward logistics and tech infrastructure. The emphasis on sustainability and resilience, particularly through deep energy retrofits, highlights a shift towards environmentally responsible real estate practices. This recovery is not just about financial metrics. It involves a broader strategic repositioning that allows the sector to adapt to changing market dynamics and consumer preferences. 2. Cybersecurity investment as a priority. With the increasing sophistication of cyber threats, investment in cybersecurity is projected to grow significantly. Organizations across all sectors, including real estate, are prioritizing the protection of data and infrastructure. The urgency highlighted by the World Economic Forum emphasizes that businesses must bolster their defenses in light of escalating digital transformations. Many companies are planning to allocate substantial portions of their budgets to enhance cybersecurity measures. This trend indicates not only a response to immediate threats but also a strategic recognition of the long-term importance of cybersecurity in sustaining operational resilience and building consumer trust. 3. Educational sector transformation through technology. The education sector is undergoing a transformative phase, largely fueled by the integration of technology. The shift towards remote and hybrid learning models accelerated by the pandemic has led to increased investments in digital tools and platforms. This transformation is driven by the demand for accessible and flexible education solutions, making it imperative for educational institutions to adopt innovative teaching methodologies. The anticipated rise in investments reflects a recognition of the need for educational systems to evolve in alignment with technological advancements, ensuring that learners are equipped for a rapidly changing job market. 4. The role of digital transformation across sectors. A common thread linking the anticipated growth in investment across the real estate, retail, cybersecurity, and education sectors is the emphasis on digital transformation. Companies are increasingly recognizing that technology is pivotal to driving investment and operational efficiency. The focus on integrating digital technologies not only enhances customer experiences in retail but also streamlines processes in real estate and education. Furthermore, the shift towards sustainable practices, particularly in real estate, underscores a broader trend of aligning business strategies with environmental responsibility. The collective emphasis on digital transformation is indicative of a strategic pivot that prioritizes innovation as a means of staying competitive and resilient in the face of evolving market challenges. In conclusion, the anticipated 50% surge in investment across these four sectors signals a vital recovery phase characterized by strategic shifts, technological integration, and a commitment to sustainability. Each sector's adaptation to contemporary challenges reflects a broader trend towards resilience and innovation, setting the stage for robust growth by Q1 2027. 1. The dot-com bubble 1995 to 2001. The rapid growth of the Internet in the late 1990s led to a surge in investments in technology companies, particularly those related to the Internet. Venture capital poured into startups, many of which had unproven business models. By 2000, the bubble burst, leading to a significant decline in tech stock prices and the collapse of many Internet-based companies. This event highlighted the volatility of investment in emerging technologies and the need for due diligence. 2. The housing bubble and financial crisis 2007 to 2008. The U.S. housing market experienced a dramatic rise in home prices fueled by easy credit and speculative investments. The bubble burst in 2007, leading to widespread foreclosures and a financial crisis that affected global markets. The crisis underscored the risks associated with real estate investments, particularly when driven by unsustainable lending practices and overleveraging. 3. Cybersecurity investment surge post-2010. Following high-profile data breaches and cyberattacks, including the Target breach in 2013 and the Equifax hack in 2017, companies began to significantly increase their investments in cybersecurity. This surge reflected a recognition of the growing threat landscape and the need for robust security measures. Organizations across industries prioritized cybersecurity in their budgets, leading to innovations and advancements in technology and strategies to protect sensitive data. These historical cases demonstrate the impact of market dynamics and technological advancements on investment trends, highlighting the importance of strategic foresight and risk management in various sectors. The future outlook for the real estate, retail, cybersecurity, and education sectors is promising, with an anticipated 50% surge in investment across these industries by Q1 2027. This forecast reflects ongoing recovery and strategic shifts driven by technological advancements changing consumer behaviors. and evolving market conditions. Here's a detailed breakdown of expectations for each sector. 1. Real estate outlook. The commercial real estate (CRE) sector is on the path to recovery following recent economic challenges including high inflation and interest rates. As borrowing costs stabilize, 88% of global real estate executives foresee increased revenue growth in 2025. Key investment areas will include industrial properties, driven by supply chain resilience and reshoring trends. Multifamily housing, reflecting ongoing demand for rental units. Digital economy properties, such as data centers spurred by the surge in AI and technology use. The emphasis on sustainability will lead to investments in deep energy retrofits and smarter buildings. Positioning real estate as a key player in addressing climate change. 2. Retail sector. The retail industry is expected to see significant growth fueled by a rebound in consumer spending and the integration of digital technologies. Retailers are focusing on omnichannel strategies, enhancing customer experiences through seamless online and offline integration. Technological investments, allocating resources to improve inventory management, personalization, and customer engagement. As consumers increasingly favor convenience and personalized experiences, retail investments will likely shift towards enhancing these capabilities. 3. Cybersecurity. With cyber threats becoming more complex, the urgency for robust cybersecurity measures is paramount. The World Economic Forum highlights that businesses must bolster their defenses amidst escalating digital transformations. Key trends include increased investment. Organizations are expected to allocate more budget towards cybersecurity with a focus on safeguarding data and infrastructure. Emerging technologies, investments in AI-driven security solutions will enhance threat detection and response capabilities. By 2026, cybersecurity spending is projected to peak as organizations prioritize risk mitigation in the face of growing threats. 4. Education sector. The education landscape is undergoing a transformative shift, largely accelerated by the pandemic. Predictions for this sector include investment in digital learning tools. As remote and hybrid learning models gain traction, educational institutions will invest in technology to enhance accessibility and engagement. Focus on lifelong learning. As workforce needs evolve, there will be a greater emphasis on reskilling and upskilling, leading to increased investment in adult education and vocational training programs. The education sector is likely to see a rise in partnerships with tech companies to leverage digital solutions for enhanced learning outcomes. Common trends across sectors. 1. Digital transformation. All sectors are embracing technology as a critical driver for growth. This includes integrating AI, enhancing data analytics, and adopting automation to streamline operations. 2. Sustainability and resilience. There is a growing recognition of the need for sustainable practices. Investments will focus on energy efficiency, reducing carbon footprints, and building resilience against climate impacts. 3. Workforce development. As industries face a demographic shift with an aging workforce, attracting and retaining talent will become a priority. Organizations will invest in upskilling initiatives to prepare employees for future challenges. Conclusion. The anticipated surge in investment across real estate, retail, cybersecurity, and education by Q1 2027 reflects a strategic repositioning in response to economic recovery and technological evolution. As organizations adapt to changing market dynamics, those that prioritize digital transformation, sustainability, and workforce development will be positioned for success in the coming years.